Nice. Full screen it. There we go. So it should be a good one. If you guys have been here before, welcome back. If you haven't, it's good to see you. Some new faces is always a good thing. And I'm glad you guys are able to make it. Um, this lesson is going to be a little different compared to the rest. The other ones were more like beginner trading knowledge, kind of fundamentals. This one is going to be more on how to specifically get started. So I talk about prop firms a lot on my story about how I love prop firms because it's a very easy way and cheap way to get started without risking your own capital. So we're going to talk about that. I guess the breakdown for the whole lesson is going to be a presentation because it's a smaller group. I kind of want to get through the presentation fast so I can get to your questions at the end. I don't mind kind of opening it up where it just becomes a Q&A at the end like the last ones. The last meetings had, over 40 people, so it was a lot more hectic for the Q&A, so it was more presentation based. But for this one, I'm going to open it up towards the end, maybe the last 15 or 20 minutes of just us kind of going back and forth, asking whatever questions you want. And it could be as specific as you guys, can imagine. If you're dealing with your own trading journey, I can help with that. If you want to talk about the prop firms, how to get started, how to set up your charts, things like that, you could ask away. So note those at the end. And then regarding the actual presentation, it's pretty dense, but I'm going to try and get through it pretty quickly. I do plan on recording it. So if you guys miss anything, I'm going to be recording it and uploading it on the YouTube. I have been slacking on the YouTube. So I'm going to be putting all that on there. And then, yeah, so the presentation is going to be the prop firm blueprint. We're going to talk about investing versus trading, kind of what to expect throughout your journey, the importance of kind of understanding the differences between investing and trading and how much of a business it is, and the time commitment, the financial commitment, just kind of breaking down everything, how it's supposed to look start to finish. And then at the end, we'll talk about the prop firm and finally, the giveaway. So I'm going to be giving away the Apex evaluation accounts. So hell yeah, Rodney, for sure. Yeah, it was going all right. The views were a little low, and I didn't think there's people interested because mainly like the likes on the story. But when I stopped uploading, a lot of people actually, reached out. So I'll probably be more active on the YouTube for sure. Just for your guys' heads up if you want to pay attention to that. So without further ado, let's get started. So this lesson is going to be the prop firm blueprint. I'm gonna try not to make it sound like a boring like lecture presentation. So I'm just gonna kind of run through all these things and what we have to talk about to the end. So to start off, to understand what trading is, we kind of have to understand what investing is. So I'm sure you guys have heard of investing. There's many ways you can invest, but investing in the stock market pretty much means parking your capital, which is just your savings or your money, into an index fund or a basket of stocks or even individuals. And the point of investing is this very long term. Okay. The key features is that it's a little bit lower risk, right? The lowest risk would be just a savings account, but investing is a little bit higher risk, but still low compared to trading and other investment opportunities. And the important thing to understand about investing is it requires no skill, right? If you just put a small amount of money consistently into the market, called dollar cost averaging. And if you guys have questions about investing specifically, I'm more than glad to help you guys out with this as well. How to invest if you guys don't want to actually get into trading, you want to get into investing, that's perfectly fine. I do both pretty successfully, so I could help with that as well. But investing is more like a money tree. You water it every day, you have small little contributions, and in the long term, the effects compound and you have very big gains in the future. Trading differs because trading is a skill. So trading, instead of the money tree analogy where you're making little contributions each day, trading is more of a skill. So I like to compare it, first of all, to business, but another easy comparison is like sports or the gym. Okay. You start going to the gym or you start playing sports, you're usually very bad. There's probably no progress. Okay. And it's about the progression. It's not until the end where you actually start to reap the benefits of trading, similar to the gym or sports, right? When you play sports, you play since a kid. You're not very good until maybe you get to college, right? That's 18 years of hard work and effort into the sport until you actually have skills to transfer into money. Okay. Trading is no different, right? We put our time and money into college degrees to eventually get a job in the degree. And trading is no different, as it is a business that requires a lot of active skill making. Okay. The goal of trading is to make short term active profits The way I trade is intraday. So my trading is intraday movements in the stock market. I capitalize on volatility and momentum within the market day. All right. Now, I have a little comparison table, I guess. It's going to be the savings account, investing, and trading. And we're going to compare very big key details of each, right? So savings account, your risk is virtually none. The only risk you really have is inflation, right? If you have your money frozen in your bank account, inflation is going up, so your value of money is going down, right? But there's almost no risk in terms of actually losing your money. Most of the money is insured. It requires no skill because obviously you're just direct depositing it into your bank, and your projected gains are almost none, right? Your savings accounts are usually paying 0.01% at the major banks. And if you do a high yield savings account, those even pay about 3 or 4% right now. Investing is going to be this kind of middle ground where your risk is low to medium and the skill required is still low. So that's why it's attractive, because the gains can be pretty substantial, especially long term, right? But it requires almost no skill. Like we talked about, if you could simply set up a direct deposit, you could pretty much invest, right? You could do an automatic investing every week straight out of your paycheck, right? Trading, however, is very different. The risk in trading is extremely high. So this is pretty much the highest exposure you could have, meaning you could lose money just as fast as you can make it, and the gains are very exacerbated, right? So all the gains that you make and all the losses you make are going to be way higher than just buying an individual stock or ETF or similar. The skill required is also high. Okay, I didn't put very high to note, right? The risk is very high, but I didn't put skill required as very high. The skill required is high, okay? And we'll talk about why I didn't put that more later in the next slide, I believe. The projected gains, because your risk is the highest, right? When you risk more money, you're generally wanting to make more return from it. And this is exactly what trading reaps, right? When you risk so much money and you develop the skill, right? Both of these have to be in check. The projected gains are going to be higher than both the savings and investing, right? Now, a lot of people, especially online, talk about trading. You could see in the previous one, this screen where you have a million screens and a huge setup, right? I started trading on just my regular PC from when I used to play Fortnite back in 2019, literally. I have that PC and I had one single monitor that I bought on Black Friday, and that was all I had to start trading. And that was completely overkill. Like that was more than enough to start with what I needed at the time. Okay. You could pretty much start now with just a standard phone, laptop. As long as you have internet on a device, you can begin at least learning how to trade. Okay. Now, the capital requirements is where the landscape has changed a lot. And this is where we start talking about the prop firms. So before, you would have to have a big savings pool, right? Usually to start trading, if you ask any professional trader now, they'd probably say, yeah, I started with $20,000 or $30,000 of my own money, meaning that's real risk into the market that I could lose any moment. And I did. Okay. I started with 25,000 in the beginning. It was about all I had in terms of my savings, my freshman year in college. And that got down to about 7,000 before I actually started to make it back, bounced it back up to 25, then up to 30, then back to like 15. And it was just a teeter totter around that mark, right? That is my real money, thousands of dollars a day changing of my real capital. Nowadays, it is completely different. We have what's called prop firms, and we'll talk about what prop firms are specifically in a couple slides from now. But the capital requirements for a prop firm are a lot lower. If you win the giveaway, it's $0 because I'm going to be giving it away for free. So to get started with a prop firm, especially with the ones that I'm going to be talking about, you pretty much have to pay $20, $30, or $40 for an evaluation, so long as you could prove that you're a profitable trader, which is the hard part. The easy part is the capital, $30, which I hope everybody has, but actually proving you're a profitable trader. If you could do this and you pass the evaluation account, then they will give you their capital to trade with, and whatever profits you make out of that will be put in your pocket. And that's where the beauty is, because the most you could lose is what you pay. So in the stock market, if you're investing 30K, you could lose all 30K technically, okay? Especially when we're trading short term with so much leverage. But in a prop firm account, if you buy an account for $30, if you make 2 or 3,000, you get to withdraw that money. If you lose 10,000 or 20,000, you end up losing the account, which is the $30 you put in, and you move on, right? That's the beauty of these prop firm accounts. Now, those are the physical requirements. That's very easy. You can see there's 2 things on the bullet list. The non-physical requirements is where 95% of people fail. And we talked about in the last lesson how you have better odds of leaving a casino in profit. And I think I have the quote again later in the presentation, right? You have a better chance, 13% chance of leaving the casino in profit compared to a 1 to 3% chance of being profitable in the stock market, right? So the non-physical requirements, which is a non-negotiable to be profitable and where most people fail, are these listed below. I'm not going to read all of them, but to list them out, it's extreme discipline, emotional detachment, right? To elaborate on this one is pretty much detaching yourself from the money and the outcome. Okay. High focus, because it is like a sport and a skill that you have to be always on your A game. Accountability. Logging trades is one of the most important skills you could have, especially with trading. Probability thinking or probabilistic thinking, because you are playing a probability game at the end of it, right? Instead of playing the casino side of a losing game, trading is essentially tipping the scales slightly in our favor to then play as the house. So if you're in the casino, you have a 47% chance of winning, right? That means over the long term, you're going to lose money. If we could tip those scales to our favor in trading with a bunch of different factors, right? Strategies, etc., then you can turn yourself into the house. If you have a 55% win rate, for example, then over long term, you're going to lose 45% of the time. But over long term, you will be profitable. And that is the probabilistic thinking you have to adopt to become a trader. And the last thing is patience. In the movies, it's very easy to see that trading is a super high intense clicking buttons, 100 buttons at a time and taking 1,000 trades every hour. But in reality, and my students were the first ones to kind of have this realization, in reality, the most of my trading days are just quite literally sitting on my hands. And I do that so I don't, like, it was a habit that I had early on, so I don't click buttons and have, take bad trades, etc. But most of trading is just sitting there, watching the charts, waiting for your opportunity, right? So the patience is very necessary as a non-physical requirement to start trading. Now, let's talk about prop firms. So there's a lot to take on this slide. But we'll start off with what a prop firm is. So we talked about specifically a prop firm is a person, or not a person, a company who's providing capital for you to trade with after passing the evaluation. Some prop firms do straight to funded accounts. I don't love those because they're not proving anything. They're a lot more expensive and all of the above, right? But most prop firms operate in the system that you pay for an evaluation, which is usually 20 to 50 bucks. Some can be higher, right? If it's over 100 bucks, you're probably overpaying. But the evaluation is pretty much saying you have a profit target and a loss. Okay. The profit target is usually a 3-to-2 ratio. So if you can make $3,000 before losing 2,000, that's passing the account. If you lose 2,000 before making 3,000, you fail the account and you have to get another evaluation. So if you could prove that you could make that money in the evaluation account and you pass, you are given real money to trade with. So in this case, in the example on the right over here, is a 25K account. So if you hit this $1,500 profit target, they will give you $25,000 to actually trade with. Any money you make on that account, you then take a 90-10% profit split. So if you make $10,000, you take 9,000 home. This is a very way to get started because this is how I made actually a lot of my capital early on. For me, I wasn't actually profitable until I started using prop firms. It wasn't a capital issue for me personally. It was something more mental. And the idea of not trading my own money was the easiest thing for me to get over because it's not my money. I could trade freely, I could trade comfortably and do whatever I want pretty much. And that's why I love prop firms so much, right? I do want to talk about this graphic right here. You can see the statistics of prop firms. And when I said the 97 to 99% of people fail, that is not an exaggeration. These are real numbers from Top Step, which is a pretty big, it's the second biggest firm, actually arguably the biggest, but I'd say the second biggest prop firm in the space. You can see out of 100,000 traders, only 12% even passed the evaluation stage and 3% eventually made it to a payout. So that's 97% of people actually failing before making a payout. This isn't to kind of scare you guys and be like, oh, it's impossible to trade, right? It is possible. All right, 3% of people did it, including myself, but it is difficult. And I want you guys, if you do want to get part of this journey, and I completely applaud you if you do, and I will help you along the way if I can, right? But if you do get along the journey, it has to be a long-term thinking where it has to be 6 months of work and effort with absolutely no return, and possibly in more likely negative return. You're most likely going to lose money for, in my case, 3 years before I even made a single penny consistently in the market. Okay. And that is where trading gets mixed up. It's very easy to think it's a get rich quick scheme where you could just easily, just trade. Oh, I'll just learn it for a month, figure out what to do, press buy and sell. It can't be that hard. Make $100,000, retire my job, right? But if it was that easy, everyone would do it. That's how I like to think about it. So if you shift to your long-term mindset and actually think of the building a skill, then you can actually make it work. That's the only way to make it work. Okay. Now, Apex Trader Funding, you can see on the right and on the bottom. This is my biggest recommendation for the prop firms. These are the ones that I'm going to be giving away. I like them because they're the easiest. Oh, sorry, not the easiest. They are the cheapest. Okay. They have 1-day pass on all accounts, and they have TradingView, Tradeovate, and real-time data included. Meaning, once you pay for the account, which in this case is $19.90 for the 25K account, once you pay for that account, they give you Tradeovate license, which means you could trade on the platform Tradeovate, and we'll talk about that if you guys have questions on it later. And then they also give you real-time data, which you would normally have to pay a monthly fee for directly to the CME exchange to even see the current price of the stocks, of the futures. Okay, so Apex is a great way to get started. They do have the most difficult rules among other prop firms because they have what's called a trailing drawdown. They have an account option where they did change this, and I could talk more about that if you guys have questions on it. But I like to imagine it where if you could pass an Apex account, you can, first of all, you are definitely a profitable trader because they make the rules very difficult for unprofitable traders. And if you could pass their account, you could pass any account, right? My personal path was I passed a bunch of Apex accounts, took a lot of money out of the Apex accounts, and put that money into my personal account with no rules, with no guardrails, which they set you up with. And I got to trade freely as if I was on my own company, which is how I trade now. Okay. These are some, I guess, credibility receipts. I have to put these kind of to show that, I have been through these prop firm routes. You can see these are actual payouts from Apex Trader Funding. I've had a bunch of payouts from them over and over throughout the years. My own withdrawals, my own past accounts. I currently don't trade with them anymore, but I have made a lot of money in them with the past and moved that money into my personal account where I trade more freely. That's my personal decision. But this is again why I recommend it so much, because before I was trading the Apex accounts, I was actually not consistently profitable. I made money investing at this time, which helped keep me afloat. Right, I had Bitcoin investments, and this was during when Bitcoin was, pretty much bull running. So I had that kind of fall safe where if I did lose my money, I still had some money saved up. I could try again or move on and whatever. But it wasn't until the point where I actually started passing the Apex accounts and taking withdrawals to where I was consistently profitable, right? 2024 was my best year. As you can see, most of these receipts are from 2024. I kind of pumped the brakes since then because I have been trading my own personal account. But these people, in simple terms, have changed my life. And that's why I'm trying to kind of recommend them more than anything, because it's a very small way to get into trading, right? Versus losing thousands of dollars of your own money in seconds, because that's how quick it can happen. Okay. So a final note is the brutal reality. So trading is not impossible, but it is hard. This is where I said the quote is back. Statistically, you have better odds walking at a casino in profit, right? We talked about the graphic. The first lesson, 13% of casino players leave profitable. 99% of traders leave unprofitable, right? So it's a huge difference between trading and gambling, which is why people can relate trading to gambling, because the odds are very similar, right? But the truth is, it isn't impossible, okay? Why 99% of traders fail, or retail traders, is two very simple things. It's a lack of structural or profitable system, right? They simply just don't have a profitable system. And the more common one, surprisingly, and it's very easy to understand in the beginning, you're like, oh, if I have a profitable system, I could just make money. But the overwhelming majority of people actually are unprofitable because of their own emotional decision making. Okay. You can have a profitable system. If I tell you this system will make you $100,000 by the end of the year, you will trade it. But the truth is, by the end of the year, you probably won't make that $100,000, not because of the system, but because of what you did during that. Okay. I didn't tell you there was going to be drawdown in those periods. I didn't tell you there's going to be big gains followed by big losses. Okay, and this is where the emotional decision making has a factor. Okay, you can have a profitable system, and your own decision making can ruin your own profitability. Now, the last thing I want to note here is one of the biggest regrets I had in the beginning of trading was not going out and finding a mentor. I tried to tackle everything myself. I tried to pretty much, brute force it and just put as much time as I can into doing it. There is a lot of information on YouTube, and I am completely transparent about this fact, right? There's all the basic information, fundamental information on YouTube about trading. But the truth is, it is very messy. Okay. There's a lot of information where it gets overwhelming. And when you find a profitable mentor, they save you not only the time and heartache, but also lots of money, right? Losing thousands of dollars because of a very simple mistake that could have been in a sentence from a mentor is something that I regret doing. Okay. Now, I have my own program. I had the version 1 of the program. If you guys have seen on the stories, the version 1 went very well. I took on 4 students. They're not profitable yet because that wasn't the promise. It's been 8 weeks, but in those 8 weeks, they've made a lot of progress. Okay. In those 8 weeks, one of my students already passed a funded account. I blocked out his first name here, but this is his actual certificate from Apex. And remember, I said Apex is one of the hardest accounts to pass. All right. He passed it on his first try. Okay. The other 3 of my students, we did a before and after, audit to kind of see where their progress was. All of them started from zero. They knew nothing about the stock market, and all of them are now trading on these funded accounts, attempting to actually further their knowledge and actual trading. But the point is, in these 8 weeks that they were trading, all of them agreed that their money was worth investing into the mentorship. You can see this response here. He learned much quicker than from learning from scratch and researching everything himself, right? There's a lot of questions about trading, and there's not a lot of people you could trust to ask these questions to. And that is kind of the service that I'm trying to provide. Okay. These are some of the student profits from the mentorship. And remember, they were only in the mentorship for 8 weeks, and I only gave them access to paper trading for 4 weeks. Okay. So in those 4 weeks, they have already developed systems where you can see their charts are actually very professional. You can see they mark out highs and lows. They can identify momentum and shifts and higher highs, higher lows, all these things that we talk about in the mentorship, as well as set up actual profitable strategies. Okay. This example, I think David is here too. This is like one of my favorite quotes that he said, because sometimes our setup, we call these A+ setups, feels like a layup, right? Some setups are so easy and so clear when you see it the right way, right, that it's almost impossible not to take. All right. You can see some other profits that Josh, he said, finally took a dub after the market playing with me. These are the things we teach, because what I see on this quote is that he was losing, right? But the important thing is coming in with a level head and still taking a profitable setup, marking out the chart, putting notes on each trade with a nice risk to reward ratio, and executing the strategy to perfection. Okay. So these are just some of the student profits from the 8 weeks. I do plan on taking these students along for the version 2 of the mentorship, but I am also opening it up, and we'll talk about that right now. So I'm going to be opening up the version 2 of the mentorship. This isn't to pressure you at all. This is just an application. It's a Google form. It takes about maybe 90 seconds to fill out. Okay. It's just very basic questions on pretty much why you want to get started with trading, what your experience level is, and how much money you have to invest to actually put into the program. All right. Filling out this form will give you your entry ticket to the evaluation giveaway. I'm going to be giving away 3 of these accounts. If you fill out this form now, I'm going to be seeing your things. I'm just going to be putting it into a random number generator and pretty much giving these accounts away personally through the DMs. I'm going to open this up to other people as well. So I'm going to be posting this on the story. They will be in the giveaway as well.